This is Ag Matters PM from the Iowa Agribusiness Radio Network, brought to you by the Iowa Soybean Association, your daily recap of the information that affects Iowa's farmers, producers, and consumers, right here in the heart of the heartland. With reports from our award-winning broadcast team of Dustin Hoffman, Riley Smith, and Mark Magnuson. Now, from the IARN studios in Des Moines, here's Dustin Hoffman.
Well, hello, everyone, and welcome to Ag Matters PM from the Iowa Agribusiness Radio Network. I'm Dustin Huffman. Today is Monday, January the 29th, 2024. We're so glad you could join us. Coming up a little later in this program, I'm going to talk with Iowa Renewable Fuels Association Executive Director Monte Schmahl about the future of sustainable aviation fuel and that industry, both for Iowa and for the country. We'll also give you a preview of this month's Pods of Potential program that's put out by the Iowa Soybean Association and the Iowa Agribusiness Radio Network. And we'll also take a look at the markets. In fact, let's do that right now. It's time now for the Ag Matters PM Closing Market Summary, your source for market analysis and settlement prices from the day's trade in Chicago, courtesy of the folks at agmarket.net. We're at the end of another trading day, and we're talking right now with Robin Schmahl of agmarket.net. And Robin, to start the week, at least overnight, it looked like grains were taking a shellacking. Did that continue throughout the day today?
Well, it did for the most part. The only one that really showed some strength was soybean meal, closed higher on the day. But we did see a nice rally in soybeans as we moved through the day, almost coming up to about unchanged, but then it just fell apart again. So I'm not exactly sure. That might have been just some short covering on some profit taking, but we did actually, move to a new low for this move. We got the front month contract below $12, so it's not looking good there. Much of it was because of more favorable weather, basically, or forecasts in Brazil. And Brazil, really, their planting is progressing fairly decent, and harvest. Their soybean harvest is at 11% complete as of Thursday. Now, whatever they were able to accomplish since then, we're not sure. But last year, they were 5% done. So we're a little bit more than twice as fast right now at harvesting, which is going to allow for more of the beans to be on the marketplace quicker. Ag Rural, they estimate the safrinha corn crop right now is 11% planted versus 5% last year. So that's moving along fairly good as well. Now, we had export inspections came out today. It was good for corn, 35.5 million bushels, up 6.1 million bushels from last week. Beans suffered. Beans and wheat, actually. Beans were 32.7 million bushels, down 10.8 million bushels. Wheat, 9.7 million bushels for export inspections, down 1.9 from last week. So really, the export inspections really don't have a lot. Doesn't seem that it has a lot of impact on the market. It might be for a little period of time, but other than that, it's business that's was sold already and not inspected to go out. But in the big picture, unless we get significantly strong inspections and sales for multiple consecutive periods of time, it just seems to always be chopping around something to keep your eye on and put in spreadsheets, but that seems to be the extent of a lot of the market potential. Now, the wheat standpoint, wheat was lower, but not hit as hard as soybeans. But last week, Chinese authorities, they authorized wheat to be imported from Argentina for the first time ever. That was released last week, kind of rehashed today again. Probably had some impact as well, just some further selling in the market. Plus, we have global buying of wheat in the last 2 weeks has slowed. So that makes an impact as well on overall wheat demand coming from the U.S. or from the European Union. So wheat is struggling a little bit at this point in time. Whatever is going to spark that could be some weather scenario once we start breaking dormancy. But at this point in time, it's certainly not being supported and real friendly from demand.
So looking at the other side then on livestock, I know we were hopeful going into the day that things were going to keep riding that higher momentum we saw. I saw hogs rode a little bit, but cattle wasn't so fortunate today.
No, cattle started out well, moved higher. We got to a certain point and they just kind of backed off. Part of it could be because they're a little overbought, but so traders maybe just took a little bit of a precautionary trade to that. The show lists that are released today were showing something mixed, so that was not really a big issue. Some of it could have been on the whole complex in general because of feeder cattle. The May feeder cattle closed the chart gap that's been sitting there for quite a while. Could have triggered some sell orders there. Now we did the closer months still have their chart gaps there yet, so that wasn't even much of an issue. And there's chart gaps a good ways above on the live cattle markets. So we're not there to that point. So I think generally it was just we had such a strong move last week. We don't know what cash is going to be now. There weren't a lot of cattle last week for down the road here. So it seems like the cattle buyers are a little short bought at this point in time. That if they are, then they might have to step up a little more aggressively as we move through the week. Now, last week we saw $2 higher trade in the south, average of 175, and $3 higher trade in the north for the dress cattle at 277. Now, box beef at midday was mixed. Choice was up 97 cents and select was down 20 cents. That's going to be the key, whether we can continue to see some strength in that box beef or if that's going to follow a pattern like it did earlier in the month. It seems like demand has picked up a little bit, but we'll have to see. Now, cash was stronger last week, and that is fueling the fire or the resolve, I should say, of the feedlots in order to hold on a little bit more probably this week. Now, hogs, they were cautious. I mean, technically, the market looks good. It held today, the gains from last week. Fundamentally, there's some concern over the demand that's there in the marketplace. Cash wasn't released this morning due to Packer confidentiality. It had been a good week last week where we saw cash higher. I think it was every day last week or most days. We did see some strong cutout values. Now that they're back on track with slaughter, they may not have to be quite as aggressive to get those hogs because the hogs are out there. Cutouts were down 2 cents today at least the morning report. So that's really not too much of a deal. I think traders are kind of waiting to see what the demand was over the weekend before they determine whether they want to add to their long positions in the market or whether they want to take some profits.
All right. Well, Robin, if folks want to talk about some of the market strategies they should be thinking about here as we get into the 2024 growing season, if they want to pick your brains at agmarket.net, what's the best way for them to do that?
Yeah, you can call me directly at 877-256-3253 or go to the agmarket.net website. The 844 numbers listed there, and they can call in and somebody will be glad to work with them.
All right. Well, Robin, thanks so much for the insight. We'll talk to you again real soon.
All right. Thank you. It's always a pleasure being on.
And that again was Robin Schmahl of agmarket.net. Let's go ahead and take a look at the closing numbers. That comes to us courtesy of the Iowa Agribusiness Radio Network market screen. March corn was down 6 at $4.40 and a quarter. Soybeans down 15 cents at $11.94 and a quarter. Soy meal up $5.30 at $354.30 per ton. Soy oil down $1.38 at $45.55. Chicago wheat down 6 3/4 at $5.93 and a half. Kansas wheat down 6 1/2 cents at $6.18 and a quarter. Minneapolis spring wheat down 10 1/4 at $6.93 and a quarter. Oats up 1 1/2 cents at $3.65 and a quarter. February live cattle down $1.07 at $177.37. Feeder cattle also down $1.07 at $238.62. Lean hogs hung on to a 35-cent gain at $75.27. Pork cutouts down a nickel at $87.40. Class 3 milk up 39 cents. That's been a check of the market recap. We're going to take a short break and hear from our sponsor, the Iowa Soybean Association and the Soy Checkoff. When we come back, we talk with Monte of the Iowa Renewable Fuels Association. This is Ag Matters PM.
Iowa Soybean Association is driven to deliver for Iowa's 40,000 soybean farmers. We're proud to provide objective agronomic research, a helping hand with soil and water stewardship, and timely industry news powered by the Soybean Checkoff. Learn more at iasoybeans.com.
Welcome back to AMPM from the Iowa Agribusiness Radio Network. I'm Dustin Huffman. Well, we recently had the Iowa Renewable Fuel Summit, and one of the hot topics out there was sustainable aviation fuel. And with the plant just coming online in Georgia, Monte, the executive director of the Iowa Renewable Fuels Association, had the chance to visit with that plant and also had the chance to talk with us about what the future of sustainable aviation fuel means for Iowa and for the country. All right, so we're talking right now with Monte Shaw. He is executive director of the Iowa Renewable Fuels Association. And Monte, it's been a busy couple of weeks. You guys had your Iowa Renewable Fuel Summit. Of course, that was a good success as always. And of course, we are still talking about the future of the biofuels in the grand scheme of things. And of course, the big topic I know at the event was the sustainable aviation fuel situation. And you had a chance to go down to the plant in Georgia where they're doing that and see what's going on there firsthand. Tell us a bit about that experience.
Yeah, it was kind of mixed emotions. I was very nice of LanzaJet to invite me down there to see literally the world's first commercial scale facility that's going to convert ethanol into sustainable aviation fuel. It's a beautiful facility, obviously brand new. They're just, flipping the switch to start it up. And so, the message there is, sustainable aviation fuel, or what we call it SAF for short, SAF for short. It's here, it's now, it's happening. And that is exciting because as it grows out, it has the potential, if we don't screw it up, it has the potential to be the largest new market agriculture has seen probably ever. Now, the trick, though, why I said mixed emotions is right now today, while corn ethanol in the United States is obviously low carbon compared to petroleum fuels, it's not low carbon enough to qualify as a feedstock for sustainable aviation fuel. And so now with that plant running, there's one plant in the United States that can do that. They're sequestering their carbon in North Dakota. The rest of these plants, we need to do things to lower the carbon score even further. And the easy way to do that, the cost-effective way to do that is carbon capture and sequestration. So right now, until, like in Iowa, we don't have any plants that are sequestering carbon. So we don't have ethanol that qualifies as feedstock for sustainable aviation fuel. So, we're missing out on this large new market until we get our house in order.
And, you bring up the carbon sequestration. I know the pipelines are proposed, but there's been some setbacks. We're really not seeing them really moving forward that much. A year ago, Monte, I was in Brazil and I had the chance to see their ethanol plants. They're sequestering right below the property or the land where they're doing this. I mean, is that an option, or is it because of the geological setup that we need these pipelines to get it to where it needs to go?
Yeah, for the vast majority of plants in the United States and in Iowa, simply sequestering it below the plant is not an option. It takes a certain type of geology where you can drill down under the water table. Obviously, we want to keep the water safe. You got to have a rock formation that is porous that you can put the CO2 into, but it's got to be a capstone layer above it so it doesn't then come back out, because that's not sequestering it. So there's some really unique geology that it takes. There might be a few spots in Iowa where we can do that, but there's no reason for us right now to believe that we can do that at the vast majority of our plants. So we really do need to be able to put it in a pipeline and send it to places like North Dakota, Illinois, some other places where those formations are well-known, well-developed, and ready to go. So our point here is, we're looking at a new market that could chew up another 5 or 6 billion gallons of corn, billion bushels of corn, excuse me. And that would require us to build probably 60 or more new ethanol plants, 11 here in Iowa. Then you have to build the facilities that turn that ethanol into sustainable aviation fuel. We're talking about billions of dollars of farm income. We're talking about tens of thousands of jobs, huge boost to the GDP. The sustainable aviation market is so big, it will take all the ethanol to jet that we can produce, and it will still have to go and find more expensive options for them to satisfy the demand. So it's really a market that can fix our problems, not just today, but in the future, because I don't know if your listeners have been paying attention. I'm sure they have, but we're heading into year 4 of a drought, and supplies have gone up, ending stocks have gone up, and the price of corn has gone down $2 a bushel. that is a loud warning sign that we are starting to enter another era of structural overproduction, because that's what farmers do in America. We overproduce, right? We innovate, we work hard, we have technology, and we overproduce that market. The traditional ethanol market has kept us out of that for a little over 2 decades, but it's happening again. It's not a surprise. This happens periodically in agriculture. And so we either have to take acres out and hurt farm income, or we have to develop a new market. And SAF is right there waiting for us. We need to come together, get these carbon capture projects over the finish line, find an equitable way forward. I know there's landowner concerns. I'm a landowner. We want to find a good way to move forward. But if we don't move forward, we're going to see ending stocks continue to build and the price of corn continue to go down, and it's going to get ugly. So let's come together and find a way forward. That's our message. That's our plea, you might say.
One thing I found interesting too when we were at the summit was, unlike sometimes we've been seeing pushback on ethanol, especially from the car companies when they tried to tell us what cars couldn't handle it, we're seeing an aviation industry that's very much on board with making this work. Obviously, they want to make sure it works right, and we all want to be a part of that. Yeah. But they're very much in favor of doing this. I mean, the one thing when we talked with one of the folks at Delta during the summit, he made the comment of, if you looked at the skies when we had the pandemic and there wasn't much flying going on, or, unfortunately after September 11th when the planes were grounded, how clear the air quality was. So they know that they need to make changes to make things better. They're looking at ways to do that, but they're very much on board to do this.
Yeah, and I appreciate you bringing that up, because a lot of people are viewing this through a political lens, like, oh, low carbon, that sounds like, the new Green Deal or something like that. From an ethanol perspective, this is business. This is a market. Our customers are asking us, literally begging us, to help them make sustainable aviation fuel because they need it. They want to lower their carbon scores. That's fine. But it also does reduce, I guess we don't call them tailpipe emissions on jet, but the emissions that come out of jet engines. And so our customers are asking us to do this. And if there might be people out there listening to us today that say, well, that's great, I'm glad they're doing it. There might be people out there today that say, that's silly, this is stupid, why should I help them? But if you want to stay in business, I've always found it a good idea to produce the products that your customers want. I guess the analogy I use is I've got a teenage daughter, and if I was in the clothing business and I wanted to stay in business, I would probably need to put on my shelves the types of clothes that my teenage daughter wants to wear, not the types of clothes that I wish she would wear. So that's what we're saying here. This is market driven. Delta, American, United, Southwest, all the Europeans, all the Asians, they all want to do this. Whether we agree that it's a good idea or not doesn't matter. They're the customers, and it's a great opportunity for us we're going into this period where we have more corn than we have a home for. And sustainable aviation fuel will chew it all up for the next 20 plus years. So let's do what it takes to take that carbon intensity of ethanol down even further so it qualifies as a feedstock for sustainable aviation fuel. And let's start this new economic engine up and take it out for a spin.
All right, and then moving on to another topic, Monte, we got some numbers from Iowa as far as ethanol production and things like that. Tell us about what those numbers mean and what they are actually as well.
For ethanol production, I think Iowa set a new record last year with I'm sorry, I didn't have that one in front of me. I think we hit 3.6 billion gallons this year. But so overall, we ticked our margin up a little bit. We have very efficient plants, or our portion of the overall production. But it's been pretty stagnant, and that's the challenge. We've tapped out the 10% ethanol markets here in the United States. E15 has been very hard to get going because of the on again, off again nature of it, and the roadblocks that, unfortunately, political roadblocks have been thrown up in front of that. And that's why, with domestic ethanol use kind of flatlining for the last 3 or 4 years, it really has taken a drought and a Russian invasion of Ukraine, which messed up the European breadbasket, to keep corn prices from falling further and faster. Quite frankly, if we'd have had normal weather, kind of average weather that last few years, we'd be sitting on 3 billion bushels of corn. And I don't even want to think about what that price would be, right? So we've really weather has kind of bailed us out the last few years, but we just aren't seeing growing markets here in the United States. That's why we have to go find some new homes for the corn. And that's why we're excited about sustainable aviation fuel.
All right. Well, Monte, we thank you so much for taking the time to give us these updates and let us know what's going on. And Can't wait to hear more about this as the industry continues to grow. But definitely, I know the point was made at the summit that the playing field is open, and they're getting us a spot on that playing field. But it's up to us how we play it going forward.
Yeah, absolutely. They want sustainable aviation fuel from ethanol. They need it to meet their own goals. Here in the United States, we produce very little really low carbon ethanol. Brazil already produces over 7 billion gallons of it. You mentioned being down there. If we don't do this, somebody else will, but they want ours. So we just need to come together, find a way to get these projects over the finish line that can work for everybody. And then we're going to have a massive new market that's pretty exciting.
That again was Monte Shaw, Executive Director of the Iowa Renewable Fuels Association. And now let's go ahead and take a quick moment to preview this month's episode of Pods of Potential. Andy Peterson had the chance to visit with Environmental Award winner from Iowa State University, Jim O'Connell. He's a Linn County farmer, and he sat down this month to talk with Andy about how he got his environmental journey started in his farming operation.
My wife and I were heading to Ames, taking our oldest son to school, and we decided driving up, getting western Iowa, and man, the ditches with the snow were just black. And we got to do something about this. This isn't right. And so we started checking into things, and we were basically no-tilling at that time. And I decided that I've read up that we could do some cover crop that could help with our soils. So I did a 40-acre patch, like you said, out back where nobody could see it, because when you screw things up, it's usually right by the road. And we planted that and came back in then the next spring and let it grow. And we had gotten a 6-inch rain, I believe, and we were planting beans there. I did one for corn and one for beans, a bean field and a corn field, 40 acres each. And we had planted beans, and I just remember my son riding with me saying, the cover crop was 2 feet tall probably. And he was thinking, boy, should we be doing this, Dad? And I said, yeah, I don't know. Nobody's going to see it anyway. It's in the back. Thank God we had auto steer, because you can see where you're going. But it ended up turning out, we planted it, and 4 or 5 days later, we got a 6-inch rain, and I went down to the waterways and checked, and everything was nice and clean. And man, I was pleasantly surprised. And yields ended up being better than what the rest of the farm did. So I increased a few more fields the next year, and the following year, I started planting everything to cover crop. So every ground that we farm has cover crop on it.
And of course, you can find the full episode of Pods of Potential online at IowaAgNet.com under our podcast tab. You can also find it through the Iowa Soybean Association. Again, great information as always. Give that one a listen. And if you've missed any of the back episodes, always some great information there on Iowa agriculture. And that's going to put the wraps on today's show. You can find all our content, as we said, IowaAgNet.com. From the IRN studios in Des Moines, I'm Dustin Huffman. For Riley Smith, Andy Peterson, Mark Magnuson, and myself, we thank you for watching. This has been Ag Matters PM.